Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Total crypto market cap is sitting around 1.25 trillion, which is well above where we were talking just a couple of weeks ago. Trading volume dipped under 40 billion. Definitely want to see that above 40 billion for continuation. Most of the times when we've been running, it's been anywhere between 40 to 60 billion. So something to keep an eye on there. Bitcoin and ETH sentiment mostly neutral right now, slightly down. Bitcoin slightly down, ETH slightly up, but total tweet volume also slightly down heading into the weekend, showing that traders and investors may be relaxing after last week's bullish price action, maybe taking a break or expecting a little bit of downside. Still got some crap coins really pumping along. Hottest on Twitter doing well. Most bullish assets doing well. Even the bearish coins aren't doing too horribly, which is a good sign. But of course, we're going to discuss where the tides may shift later. Stablecoin exchange is still mostly being added, but we are seeing some withdrawals. So we definitely want this to stay net deposits as it looks currently, but that could shift. So let's move over to DXY, where we typically like to start. Seeing a bit of a sweep above last week's high. That's certainly not the most positive, but what happened is also we swept last week's low and moved higher last week. So if you're kind of thinking the same thing, maybe we move back down, but we are still above support level of 106.1. So if we hold that, it'll definitely move higher. We can still kind of drop and hold that and move higher. And if we drop lower, then you definitely want to see this hold, or we will start to trickle down into this area. So still a lot of play to happen in DXY, but does look a bit reversally, at least on a lower time frame. So then when we look at equities, we're like, oh, this doesn't look too good. But what I, kind of told the Trade the Chain community this morning is, as long as it holds the lows from Thursday, it should have a chance to then move higher. That's obviously a big if, as we can see, after this morning, we dropped lower, ran up a little bit, and now we're kind of sitting right back near the previous daily close, which is that dotted white line. But if you can't hold this into the end of the session, then we can maybe kind of get back above 41.50 and start to kind of creep a little bit higher towards the end of today's session. And if that's the case, then kind of sets up for potentially a positive Monday, but still a big if. So we need to hold these lows. If we can hold these lows, opportunity to head higher. If you start to break underneath those lows, you're probably going to end up towards 4,100. So nothing clear on equities yet, but seeing this sweep of the low, or not a full sweep, but kind of a rejection off of the lows of Thursday is certainly step one towards possibly positive trajectory, but still plenty of time. So if we break these lows, we're going to head down to 4,100. Pretty simple system there. And if you wanted to take a long, you would just simply set your stop at the low here and walk away. And obviously, if it's hit, maybe you get another chance in at 4,100. But definitely a little risky. But the risk is defined. Let's kind of put a long position here. As you can see, you're risking 0.4% to, probably first target would be up here. So you're risking 0.4%. For a 1% gain. So not too bad of a risk there, in my opinion, but still risky, all things considered. So let's look at Bitcoin. First kind of checking out open interest, which, after that big drop after Monday's boost, we haven't really seen a rise in open interest, which is actually quite fascinating compared to historical references, because even during this big boost from October 16th, we ended up seeing a rise pretty quickly, and we're obviously seeing things consolidate. So not too much risk being put on here, which is a bit fascinating. So maybe there's not a whole lot of shorts to squeeze out, but we'll have to see. So I'm not paying too much attention to that. Nothing really to glean from the indicator. So let's just look at basic price action here. So this is basically, this kind of larger area is our range here, but I do find the 34.4 area to be quite critical, because we've deviated above it twice and then moved lower, but we are forming higher lows technically. And of course, we did have this giant higher high, but now we kind of have a lower high And we haven't really figured out what's going on here yet. So if it spikes higher, maybe to like 34.8 and then deviates lower, then that's another lower high, maybe a power of 3, and then we kind of would look to down here. And then obviously, you know, if we can't even break above 34.3, then you would probably expect a dip down here as well. Now, a lot of people probably are probably targeting this 33K area just because, you know, it's the low of where we initially traded on that Monday spike. But if we kind of zoom out a little bit, this area also coincides with, and we got to zoom out pretty far for it, but that area also coincides with the low from January of 2022. So, or I'm sorry, that's a different level. I'm sorry. 33.4 coincides with the low of February. So, and then, you know, we obviously busted above the January low. And if you kind of pay even deeper attention to this 12-hour chart, we did kind of bounce off of that January low, and now we're hovering around the February low. So, you know, significant area of historical price action, which is why we, you know, definitely always want to pay attention to these things. But the fact that we can't even get above today's or yesterday's close, certainly concerning. And so I do think some downside price action is a little bit more likely. I'll talk about a short that I'm currently in with pretty well-defined risk. But if we can't get above the previous daily close, then there's going to be no chance of getting to 34.4, which you need to break above to then attack these highs. And obviously, if you fail at those highs, then you have another equal, you know, high and should kind of sell off. But if you can't even get above the daily close, their previous daily close, that shows, you know, additional weakness. And I'd probably target this weekly VWAP first. As you can see, a lot of riding the weekly VWAP, you know, on that Sunday, Monday pump. And we've held above the weekly VWAP pretty much all week. So we haven't really like tested it. And of course, you know, it's a week around the previous daily close. So, you know, this is a tough, you know, play here. And that's why I'm not short Bitcoin and I really don't suggest it. But if you're just kind of thinking about price action, failure around here is likely going to lead to price, you know, discovering, you know, or price testing liquidity down here. And obviously on a bad enough sell-off, 33K not out of the question. Obviously, if 33K is broken, then 32.5 would be next up, you know, coincide with this wick and other historical price action we don't need to get into right now. But also see the 1 day or the 1 hour estimated trend moving average will likely end up, you know, kind of curving into this 32.5 area. So if we do sell off, you know, that would be, I would consider 33K to be pretty strong right now, but in the off chance, 32.5 should act quite strong as well. And then, you know, obviously, if we do kind of get above this region, this is where I would expect, you know, some selling to occur, especially if equities cannot kind of rebound before the end of the weekend. But if equities do kind of rebound, then, you know, Bitcoin up to 35K again doesn't, you know, seem out of the question. So definitely a bit of a tricky setup here because, you know, at the end of the day, your risk is defined on a long, but your risk is also defined on a short. So if we, you know, entered a short here, you know, that's ugly. Maybe you get something like this if you're really thinking this is the lower high area and you target down here. So that's defined risk. And then a long position would be, you know, your stop would be, you know, at these lows, and then you target this high. So, you know, it's you can find risk in either direction right now, which is why I really do not like this play. And of course, I'm expecting Bitcoin to be stronger than anything else during a sell-off, and so I really don't want to short Bitcoin. But those are the plays, and obviously those are the key levels depending on where we move today. And so we're just flat for the past 24 hours. Very tough call. So looking at ETH, you know, definitely a bit more of a defined range. And also if we look at open interest, you know, it did run again on this zoom up on during yesterday's run. But, you know, sold right back off. I guess, you know, maybe longs closed here. And then open interest is kind of reset. So that's interesting. So if we do see a rise in open interest with, you know, price pushing a little higher, definitely could spell, you know, another run of the high. So very much something to consider there. But if we're just kind of looking at basic price action, we've got one large range here. So pretty clear trading strategies if you are looking for, you know, run of the lows, you know, maybe sweep here, run up. If we end up, you know, chopping higher, short right here. So there's plenty of ways to approach this. It's not entirely too easy right now, but I will say you obviously do have some risk, some defined risk up, but I really don't love that with the way that Bitcoin is looking right now. You could certainly take it because it is obviously holding the weekly VWAP, sweep, 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 but it's also led to lower highs in the meantime. So not entirely too inspiring from a long perspective there. But the way that I'm looking at this is, it's tough to really find a short to the downside because, okay, yeah, sure, it could break 1780. Then you've got all this risk, or you've got all this liquidity right here. So if it drops here and then it spikes right back up, not too good of a play. So that's why I think, if we do end up getting a short action because we did sweep this high, we obviously moved lower. Hey, Phoenix, good to see you in the chat. Appreciate. I just saw your comment, so sorry to pause here, but I did want to say, hey, good to see you again. But so the way that I'm looking at this is swept the highs, ran the lows, right? So since it didn't fully run the lows, it could definitely still run the lows. And if it does run the lows and we hold this level here, that would be kind of a sweep of the lows. So if it holds kind of right above here, moves like this, that's not a bad risk to take, provided it doesn't just, die at 1750. And then if it moves higher, there's really no good long play until it breaks above the previous daily close, because you've got this, right here, and you've just been forming lower highs. So this would basically be a break in market structure, and then you'd long the break above 1800 and probably target, this is the area of weekly value around 1830. And obviously you've got this high up here around 1860. So there's really no play for me to make, because if you're shorting, your risk is really thin. And if you're longing, you're stop. I mean, the long is good, but I really just don't like the way that the setup is right now. So what I would do is I'd wait for a break above 1800, or I'd wait for a sweep of these lows to get long. And then obviously if we break below 1750 in the off chance, then maybe I'm shorting down to 1700, maybe 1720, which is where the low point of weekly value is, which also coincides with the 1 hour estimated 200 moving average. So no clear setups to me right now. But let's go ahead and just check out ETH BTC, because this does look pretty weak, but it definitely could try and reverse. So let's kind of draw this trend. So maybe it drops down here and then sweeps and then gets bounced back up, or if it breaks this level, retests, and then we end up moving lower. Because if we zoom out, I'm just zoom out to the 3 days. It's going to look a little ugly at first, but let's get rid of these lines so you can see it a little bit more clearly. I mean, yes, we have this trend, but I mean, look at the larger trend. And so typically you would probably expect ETH BTC to end up sweeping down here. So that's why I don't think it's smart to short Bitcoin. If you wanted to short alts, just take the good short setup when it breaks a key level, retest the key level, and ends up moving lower. That's probably a smarter move than trying to short this and get, what would your price range be? So if you short down here, it's 2%. But I'm going to pull up a chart that I'm currently in a small short on. I'm not picking massive risk up right now, but I'm in this right here. And so, I think this is really well-defined risk. So if Bitcoin drops 2%, you would expect SOL or, anything else, which is a high beta asset compared to it, to probably drop, for this to move at the low end of the value is 6%. So that's just the low end of weekly value, not even, accounting for an extreme move. So just a small move, even to this weekly VWAP, is 3%. So that's why I'm, I don't think you should short Bitcoin if you want to short, which I'm not recommending, but I think you'd be better to look at alts, because what I'm seeing on the SOL chart here is, okay, so we've got higher highs, right? Now we've got lower high, or equal high. We do have a higher low, and we are kind of starting to form one here, but does look like a bit of a failure to then, even retest these highs. So after, how long has it been? It's been, 48 hours. So it's not like it's out of the question. And obviously it's been forming, even higher lows too. But I think now is the time where, if you think things are looking a little bit weaker, then this is a decent setup. And obviously you'd set your stop up here and try and, gain most of this very wide range in terms of your short. And what I'll be looking for is maybe take some profit at 31.45 if I see a sweep. But I'll probably be targeting, really the ideal point for first take profit would be 3.4 down to maybe 30 exact. And then, in the best case scenario, somewhere down here around 28 or even, 27 if things get really hairy. So I'm not expecting this to fill all the way through, but this is the ideal, setup over, maybe heading into FOMC, which FOMC is right here on November 1. So this is, low risk setup, but clearly defined risk. If we look at this, it's 4.3% risk for a 16% gain. I think I've got it on 10x leverage. So I may lose about half of my trade value to gain, anywhere from 3 to 4x my trade value. So that's what I'm looking at right now in terms of my personal position. But again, it is small risk. And if I do see an hourly close above 33.35, I may cut early because then we're really forming, at least a higher high in this little LTF setup here. And then obviously on the macro setup, you need to break above 34 to be on a true higher high. But I'm kind of playing this in the sense that, okay, we had a higher high. Now we've got, equal highs here. And we can't get back above, 33.25. So that's kind of what I'm looking at for that. But again, I will say if equities end up closing strongly, could be a good sign, or it could be a good sign for crypto. But if they end up closing poorly, right around these lows or breaking these lows before the end of the day, I would say that's another notch in the, crypto takes a pause, at best consolidates, at worst pulls back kind of camp. So with that being said, I'm going to go ahead and get out of here for the weekend. I hope I, helped everybody with their setups and their outlook over the weekend. Again, remember, last weekend was very bullish, which has been quite rare. Monday was also extremely bullish, again, quite rare. We have FOMC next week. We're not expecting a hike, but it could be another hawkish pause because inflation's still sitting above 3% after all this work that the Fed has done. And I think markets are probably going to be a little bit more cautious heading into FOMC, especially with the massive macro overhang of possible Middle East escalation continuing. So with that being said, good luck, happy trading. See everybody in the TTC community. Remember, you can get signed up for a 14-day free trial at www.tradethechain.com. Peace out.